Let's talk about Robinhood Q3. Robinhood, of course, has set 52-week highs as of the time of this recording. I predicted for it to have at least a $26 base case when it was back at $9 over a year ago. And Robinhood has exceeded my expectations in terms of execution. I am long Robinhood. Analysts have been getting this wrong for a number of times. They have raised their expectations, but I think that Robinhood is going to surpass expectations for the fourth straight quarter, coming in with a third straight quarter of over 40% revenue growth year over year. Let's take a closer look at expectations and see what the market is thinking Robinhood might do. Now, we can see here on Yahoo Finance, the earnings per share that analysts are estimating is 18 cents per share. That is a little bit down from the 21 cents that Robinhood actually posted last quarter. And of course, they've beat 3 quarters in a row. Revenue is where I think that analysts are especially off. And so, revenue estimates, as we look here, the high estimate is $686 million. I think that Robinhood's actually going to post $692 million. So, even the highest is off. The average estimate is $650 million over this quarter. And let's look and see a little bit more of a breakdown of these transaction numbers. So, total revenue, this is from Q2. You can see how much they've climbed over this year. The business itself has greatly accelerated. It posted a $113 average revenue per user. Of course, their user base continues to grow as they push out those incentives. Now, one thing to note here, you can see this right here is substantially up. This is other revenue. If we look down, we can see the key here. Other revenues include things like Say Technologies, which Robinhood acquired back a couple of years ago. Say Technologies does a couple of things, but they get a nice boost in Q2 from Say Technologies, furnishing proxy materials for other companies as they do their annual summits and annual meetings for shareholders. And so that will fall off, but we see that every single Q2 that hits. So that will be down slightly, but I think other revenue will be climbing up, both the net interest revenue and the transaction-based revenue. Let's look first at transaction-based revenue, and let me blow this up just slightly. We can see, of course, this dramatic climb that they have seen, and we see the breakdown here. Of course, equity is pretty stable. Options grew phenomenally in Q2. Crypto is down a little bit from Q1, but still up over last year. And other revenue, which is cash card and also instant withdrawals, which hopefully you don't have to do, but it's available there. Robinhood made some money off of that. Now, what's interesting about Robinhood is they post monthly numbers. And so we not only know, we know 2/3 of the months that are going to be factored in. And so we can take a quick look here. And if you look at equity, we see that equity is up quite a bit. $104 billion in equity and 96. This is higher than anything else out there over the last 12 months. And we also see that in terms of option contracts that they had phenomenal numbers. These tend to be a lot more lucrative for Robinhood. And so these are great numbers. September wasn't as soft as people expected. There was a little bit less trading velocity, but the market itself, the S&P 500 rose by about 4%, though most expected seasonal decline. And I think Robinhood will benefit from that, plus some of the 24-hour action that was happening. Crypto notional volumes, you can see that that was fairly stable. It won't be what it was, of course, in Q1 with this phenomenal performance. Bitcoin and crypto has been pretty stable and pretty quiet. And so I don't expect too much from that. But looking back, as far as the outcome of these transaction-based revenues, I think that this will be a good bit up. And would offset actually what they're losing from that seasonality. Now, net interest revenue is the other half, just a little bit less of half of the equation for Robinhood. Margin is one of those large factors. And so we can see as we blow this up, this lighter green color here is margin interest. Robinhood, of course, lowered their margin rates quarter and a half ago. And of course, they're giving incentives for transfer bonuses that have more than $10,000 of margin that'll impact them this coming quarter. We saw margin, of course, stabilize and make just as much, or actually even just slightly more than it did in Q1 rather. That was a surprise to me. Margin is going to continue to climb quite dramatically. Cash sweeps should be relatively stable. They yield about 1% over the year from each user after payout. Interest revenue, of course, interest rates on both that and the corporate cash will be impacted by the federal rate cuts that hit September 30th. But the good news is for us shareholders, those rate cuts happened on literally the last day of the quarter. And so this year, or at least this quarter, there won't be really any impact. And really next quarter, it'll just be a slight marginal impact. Credit cards are something to keep an interest on. The X1 acquisition that they had about 2 years ago, they were yielding 5 and 6 million, sometimes as low as 4, and it was negligible, of course, when they acquired it initially in quarter two 23. But I expect to see that climb just slightly. We won't see any defaults. It's a little bit too early for charge-offs at this point, but they're still ramping that up. So don't expect too much on that, just maybe a couple $1 million more. Now, as far as overall revenue, again, I think 692 million is what my calculations come out at. And if you look at year over year, analysts again are expecting 18 cents of earnings per share. I expect about 20 cents earnings per share. And is that a phenomenal beat? No, but that is a beat nevertheless. Now, the reason why I don't think it's going to be quite as much as revenue would indicate is there's some extra expenses that Robinhood is paying. They, of course, agreed to ramp by the $100 million their marketing spend through this year. And you might have seen a lot of Robinhood ads and incentives. They, of course, had their gold credit card event. They had their summit down in Miami, Florida, that I was happy to attend. And of course, they have coming up their investor day in December. And so all of these things over the course of the year do cost a little bit more because Robinhood has been killing it in terms of actual execution. They have been paying out just a little bit more as far as bonuses each year. And so it would be interesting to kind of see that continue. Robinhood, only time will tell, but they are ramping employee growth very slightly. I have a post coming out on X that will come out just a little while after, maybe a day or two after, but by Tuesday, that'll break down these numbers a little bit further. But I think the market will be pleasantly surprised. Analysts will be shocked at that revenue number because that's a 48% year over year growth, which is just absolutely phenomenal for a cash printing company like Robinhood. Now, what's interesting is, that partly comes last year at this time, they had an over $85 million settlement for the GameStop drama that you are probably well familiar with. Now, what do I think that the market will actually do? Well, let me share with you one more screen. And this, of course, is a look at Robinhood Legend. Robinhood Legend here, this platform, I've marked a couple of things. Maybe a little bit hard to see, and I apologize if it is. But you can see quarter four earnings posted, and earnings were good. I said earrings there, it's earnings. But quarter one earnings was a phenomenal, ridiculous beat. And immediately you can see these big red candles. It dropped down dramatically. Quarter two also posted, and of course, this $13.99, it got to actually down slightly lower than that, I believe, in the pre-market. This was the yen trade day. And so Robinhood ended up posting quarter two earnings shortly after that. We saw another initial sell-off despite a 40% year-over-year revenue shocker. I think this quarter, especially given this run-up, and we can see how high the RSI is, that it's not overheated yet, but it's fairly close. It wouldn't be shocking if we see some profit taking and a bit of a sell-off. If you're looking for an entry in Robinhood after they post their third quarter of a 40% year-over-year revenue growth, you may get it, but you can see that these dips do not last long. I myself, as I enter into this, I have just options right now. I have been selling cash liquid puts aggressively in Robinhood, but it keeps going up. I will eventually sell my options and just buy straight stock, but I'll sell some puts and hope to be assigned. And if we get a nice juicy dip that the market has been happy to provide us the last 2 quarters, despite phenomenal earnings, well, all I can say is that's going to be looking good in the hood. I'm going to load